In today's financial landscape, a credit score serves as a crucial indicator of an individual's financial health and responsibility. Much like a report card for adults, a credit score reflects one's creditworthiness and ability to manage debt. This three-digit number can significantly influence a person's ability to secure loans, rent apartments, and even find employment. Understanding the value of credit scores is essential for making informed financial decisions, as they can open doors to opportunities or, conversely, close them. Ultimately, the importance of a credit score lies in its ability to impact various aspects of life, from borrowing rates to overall financial stability. The value of a credit score is most evident in its effect on borrowing capabilities. Lenders use credit scores to evaluate the risk of lending money to potential borrowers. A higher credit score typically results in lower interest rates on loans and credit cards, which can translate into significant savings over time. Conversely, a low credit score may lead to higher interest rates or even loan denial, making it more challenging for individuals to secure necessary funding. This demonstrates how a credit score is not just a number, but a critical factor in determining one's financial mobility. In addition to influencing loan terms, credit scores play a vital role in rental agreements. Landlords often check potential tenants' credit scores to gauge their reliability and likelihood of paying rent on time. A strong credit score can give applicants a competitive edge in a crowded rental market, while a poor score may result in rejection or the requirement to pay a higher security deposit. Therefore, maintaining a good credit score can significantly affect an individual's housing options and overall living situation. Moreover, a good credit score can impact employment opportunities. Many employers conduct background checks that include credit reports as part of their hiring processes, particularly for positions that involve financial responsibilities. A strong credit score can signal to employers that a candidate is responsible and trustworthy, potentially leading to better job prospects. Conversely, a poor credit score can raise red flags, hindering one's chances of securing gainful employment in certain fields. Furthermore, credit scores can play a significant role in insurance premiums. Some insurance companies utilize credit scores as a factor in determining rates for auto and homeowners insurance. Individuals with higher credit scores may qualify for lower premiums, thus saving money in the long run. This further illustrates the pervasive influence of credit scores on various financial aspects and the importance of maintaining a healthy credit profile. Understanding and monitoring one's credit score can provide individuals with valuable insights into their financial habits. Regularly checking credit scores allows individuals to identify areas for improvement, such as reducing outstanding debts or managing credit utilization. This proactive approach not only helps in maintaining a favorable credit score but also fosters a greater awareness of one's overall financial situation, promoting better money management practices. Understanding and monitoring one's credit score can provide individuals with valuable insights into their financial habits. Regularly checking credit scores allows individuals to identify areas for improvement, such as reducing outstanding debts or managing credit utilization. A credit score is a mathematical likeness of an individual's creditworthiness, establish their credit annals and monetary conduct. Lenders generally use credit scores to determine the risk of accommodating services to potential borrowers. A larger credit score mainly signifies a lower risk, making it smooth for things to hold right to loans and credit cards. Contrary, a reduced credit score can influence loan denials or the necessity of a co-signer. So, asserting a good credit score is essential for achieve unavoidable cash available for use, with illustrating a lure fundamental profit in individual finance. Interest rates on loans and credit fruit are considerably affected by an individual's credit score. Those accompanying taller scores usually accept lower interest rates, chief to abundant harvests over opportunity. E.g., one accompanying a credit score of 760 or above grant permission hold right to a debt rate, namely a filled portion point inferior dignitary accompanying a score of 620. This dissimilarity can change into pertaining to 1,000 of greenbacks in interest fees over the history of the loan. As a consequence, the worth of a credit score is not just hypothetical. It has tangible economic associations that can influence an individual's budget and general economic energy. Further loaning, credit scores can also play an important duty in employment moment. Many employers conduct credit checks as constituent the leasing process, particularly for positions that include monetary blames or sensitive facts. A weak credit score may bring about an understanding of foolishness or unreliability, conceivably obstructing task prospects. Thus, asserting a good credit score may be an important determinant in acquiring service, underscoring its worth in forming one's course. In the domain of residence, landlords and possessions management associations frequently exploit credit scores to judge anticipated tenants. A bigger credit score can reinforce an aspirant's chances of acquiring a rental feature, while a lower score can see possibility bring about refusal or the necessity for a larger part payment when buying. This active climaxes by means of what credit scores can straightforwardly impact an individual's ability to secure fixed shelter through doing their overall living conditions and behavior. Additionally, credit scores can influence security premiums, particularly for automobile and homeowners protection. Insurers frequently use credit scores as a determinant in determining rates, accompanying things maintaining better credit scores usually enjoying lower premiums. This practice stems from studies show equivalence between creditworthiness and the tendency of ordering claims. As such, asserting a good credit score not only supports monetary time but also donates to stockpiles and security costs, strengthening its overall advantage in one's economic notebook. Subsequently, educating being about credit scores and achieving strategies to advance bureaucracy can lead to complete fiscal stability. Natural conduct, such as making appropriate fees, reducing charge card balances, and continually checking credit reports for wrongs, can have a deep impact on individuals' credit score. By taking full of enthusiasm steps to embellish their creditworthiness, individuals authorize themselves to impose upon various monetary events that arise during the whole of their lives. Finally, the advantage of a credit score is multifaceted and intensely twisted, accompanying an individual's financial prosperity. From acquiring loans and benign interest rates to influencing recruitment event and housing rentals, a good credit score can freedom to enter to abundant benefits. Additionally, allure associations touch insurance premiums, stressing the need for things to supply instructions their credit health. Thank you so much for joining us on this journey through the world of finance. Whether you're a seasoned investor or just starting out, we hope you found our content informative, engaging, and perhaps even a bit enlightening. Remember, the financial landscape is always evolving, and staying informed is key to making the best decisions for your financial future. If you enjoyed this video, please give it a thumbs up, share it with someone who might benefit, and don't forget to subscribe to our channel for more insights, tips, and strategies to help you navigate the complexities of finance. Till next time, keep learning, keep growing, and keep making those smart financial moves. See you in the next video.